With our lease classified and our opening lease liability calculated, we can now determine the value of our right of use asset. This part is fairly straightforward. ASC 842-2035 states that the right of use asset consists of the initial measurement of the lease liability, which we've just calculated, plus any lease payments made to the lessor at or before the commencement date, minus any lease incentives received, plus any initial direct costs incurred by the lessee. So to calculate this, let's create another section in our lease worksheet and call it ROU asset. Here we'll include all three components. First is our initial lease liability. Next is the lessor payments at or before commencement. And finally, any initial direct costs. We'll link our lease liability directly to the amount above. Then for the payments made to the lessor on or before the commencement date, remember that we have the first payment made on the commencement date of $5,500, which we did not include in the lease liability. And if we look at our lease quickly, we also booked a $4,500 installation fee paid to the lessor as a prepaid lessor payment. So our total here is $10,000, the $5,500 payment and $4,500 installation fee. So we'll hard code this here and give it that blue background to highlight that it's a hard-coded value. Then for this lease, we have no initial direct costs, so we'll copy this down for the formatting, and this will be 0. Now the right of use asset is simply the sum of these amounts, so let's add that here, sum these up, and give this a top border. Now before we make our opening journal entry, there's one more thing we need to do, and that's split our lease liability between current and long-term portions, as we do with most long-term liabilities on the balance sheet. So let's now complete our entire liability schedule, at which point we'll have all the information we need to make our opening journal entry. So we need to amortize our liability using the effective interest method. So let's add the remaining columns. Let's list them out first and then we'll pull the formatting over later. So the first will be the opening balance for the period. Then we have to calculate the interest. Then the principal. And finally the ending balance. Then we'll copy over our formatting and just shrink this a little bit. Now to start, our opening balance on the commencement date will be the lease liability we calculated previously. So let's link directly to that. Then on the commencement date, no time has elapsed, so there is no accrued interest. So we'll hard code this period to 0. Then the principal, which represents the reduction in the liability during the period, will be the payment that we make less the interest that we calculated. Then the ending balance will simply be the opening balance less the principal. Then for the next month and each month going forward, the opening balance will simply be the ending balance from the prior period. The interest will be our effective monthly rate multiplied by our opening balance. And we'll lock this effective monthly rate cell. Then the principal will again be our payment less our interest. And the ending balance will be the opening balance less the principal. And we can now copy this logic down for every month in our schedule. Then let's add some totals as well. We don't need these for our opening or ending balance, but we'll calculate our total interest and principal payments. And as you can see, we've successfully amortized our lease liability to 0 with the final lease payment made in advance of the last month. Now let's just highlight all the formulas that are not consistent with the rest. On the commencement date, that is the opening balance here. We're linking that to our opening lease liability instead of to our ending balance from the period prior. Now the last thing we need to do for our lease liability is split our ending liability balance into current and long-term portions. So let's add 2 more columns and call them current balance and long-term balance. We'll copy over our formatting, and let's wrap the text in this row. Now there are a few ways we could go about calculating these, but I think what we'll do is calculate the long-term balance first. And then the current balance will simply be the total ending balance less the long-term balance. So to calculate the long-term balance, we'll use a sum ifs, and we want to sum all the principal payments if the period is greater than the period that we're currently in plus 12. That should give us any principal payment we'll make that is more than 1 year in the future. Then our current balance is simply our total ending balance less the long-term balance. And now we can lock our cells in the long-term balance formula, and we should be able to copy these down to the end of our lease schedule. And as you can see, when we get within 12 months of the end of the lease liability, our long-term balance is 0, and we only have a current balance left. And that's it. We've now completed our entire liability schedule, and we have all the information we need to make our opening journal entry. So let's go do that now in our accounting system. We'll make this entry on the commencement date of December 1st, 2025. And first, let's credit our current equipment lease liability. If we look at our lease schedule, the credit here will be for $56,131.54. Now we need to credit our long-term equipment lease liability for the remaining $123,517.61. We also need to credit our prepaid lessor payments for $4,500. Remember, that account currently has a $4,500 balance from the entry we made on November 25th, so this will clear that out. And then our last credit will be for $5,500 to our checking account for the lease payment we made on the commencement date. Finally, to complete this, we'll debit our equipment right-of-use asset for the $189,649.14 we've calculated on our lease worksheet, and that should balance our entry. It's 1 penny off due to rounding, but that's obviously fine for our purposes. So we can save that, and now if we look at our balance sheet, let's just remind ourselves that as of November 30th, 2025, which I have pulled up here, we had this $4,500 balance in our prepaid lessor payments account. And now if we move forward 1 day to December 1st, 2025, our lease commencement date, you'll see that balance is now gone. And if we scroll to our equipment right-of-use asset, we have our asset recorded there for $189,649. And finally, in our liabilities, we have our current equipment lease liability of $56,132 and our long-term equipment lease liability of $123,518. And all of those match up with the balances on our lease schedule here. So we've now completed step 4 in accounting for our lease, recording the initial measurement. In the next episode, let's finish off our lease schedule, which will set us up to perform the subsequent accounting.